So how's everyone doing?
Can't complain, man. Can't complain.
Maybe we can go around the horn and just give a
Hello.
quick 30-second introduction.
Sure. Hello, everyone. Brandon Potts with Framework Ventures. I'm a principal there. Been there for the last 2 years and have led a number of investments for us across DeFi, across gaming, the MEV liquid staking space as well. And yeah, happy to chat with y'all today.
JP Vega, thanks for having me. I'm from Souq. We're building a new capital market.
I'm Kohji Nagata. I'm one of the founders and the head of game development and design at Parallel Studios. We're making a collectible card game using blockchain and hopefully a bunch more other games if the gods allow. So.
Well, we'll see. So maybe we can start with sort of the idea of there's several different types of stakeholders that are involved in a project. Some of the projects into which you're investing. You have the VCs, you have the users, you have the employees, developers. How do you sort of balance all those different types of interests?
Yeah, I think what's unique about crypto and blockchain is you can actually see the activity you're trying to incentivize, whether it's giving tokens to investors or people using your protocol. That isn't available in like a traditional market or a traditional app. And so I think you can use it to coordinate new types of behaviors and actually connect that to, is that benefiting a protocol?
I mean, I think I'm a bit of an idealist, but for me, it's a bit of a meek will inherit the earth scenario. Really, like, what is your biggest user base or your biggest stakeholder, and how do you make those people happy and appease them and make sure that they're interacting with whatever it is you're building? And if you can do that, everyone else will be happy, right? Because it's just like more user adoption or more people going through the funnel will make all the other stakeholders happy, because that's the whole point of the thing. So for us, like as a game, it's just like, how do we cater to the gamers? And if we're doing it right, then the people that invested in us and the people that work for us and everyone will be kind of fulfilled. And that's
Yeah, but there's some instances in which the interests are not aligned, right? We saw this with the BNB Uniswap drama, where the community was keen for the decision to be made one way. The VCs, they had something else in mind, and often VCs have something else in mind.
I wouldn't necessarily frame it that way. I hear you on a few specific examples. But, one of the things I was going to highlight is it all boils down to the quality of your earliest partners and partnerships. And so obviously cap table and your investors, I think it's more apparent in a bear market as to what having quality investors means, and where the rubber meets the roads in terms of people not just market selling your token as soon as they see a green shoot. So vesting has reached a point of maturity where vesting timelines are kind of standard now and more longer term versus in cycles past where it was a lot of short termism sort of dominating the day. But of course you want folks in and on your cap table for the long haul. And so you vet through that process, then you reward your early employees. You want them to have upside. You want them to have incentive. And then frankly, when you get to a point where, you're ready to launch and do the public sale, it's a similar sort of cycle and mentality. And you sort of start over with a smaller pool, but you're looking for who are the, highest quality community members, for example, who you'd like to reward for, being essentially your guerrilla marketing force. And so I think, it all starts with quality and then aligning on time horizons. Those are the two predominant themes that I really distill this down to.
How do you avoid short-term approaches?
Yeah, you want to partner with quality folks. And I know that sounds like an oversimplification, but frankly, you do the same thing as you do with anyone else. You run reference checks. You understand who the humans are behind any decision or entity that you're proverbially getting into bed with business-wise. And yeah, you work with them on, hey, look, we don't want you to unlock and just market sell our token in 6 months. We would like you to be on board for a 4-year vest, for example. And so, those are becoming much more standard, much in tune with the success of the project. And to me, that's a positive sign in the industry.
I would also note that, like, it's not just about, I was saying the meek will inherit the earth. It's not just about what the largest group wants, but what's kind of best for them and the project. Because sometimes those things aren't the same. You know, I'll take it back to gaming because it's the only thing I know. I don't even know why I'm up here, to be honest. But really, what it is like everyone wants their cards to be the strongest, but that's not what's best for the game. What's best for the game is some form of balance and fun, right? And so I'm not just giving the community, the players, whoever, what they want. When I'm giving them, I'm saying no, but here's what's best for the experience as a whole. And that will kind of, rising tide raises all ships or whatever. And I think to your point, like you need to partner with people that you can trust, and you need to believe in the decisions that you as a core team are making, even in the face of people saying, no, I actually want it this way. If you really think it's the right thing to do, and hopefully we're all smart, capable individuals here, then that will, the project as a whole will benefit long term, and the people who are a part of it, holding it, investing in it, whatever, will also benefit.
What's the easiest way to sort of separate the noise from the alpha when dealing with a large community? Because there's a lot of vitriol, a cacophony of opinions. How do you identify the smart ones in something that's decentralized?
I think it comes down to incentives, and something like time is a great way to see who's aligned for the long term in a protocol, and also behavior within a protocol. Like, what are they actually doing? How are they contributing? I think those are two ways where no matter what the decentralized protocol is doing, it's a great way to segment out your community.
Yeah, but it's easy to sort of game, isn't it? I mean, I was in Paris a few months ago, and I was talking with a gentleman who said, he just had this Sybil strategy that, allowed him to get like 17 airdrops from one drop. And he goes, I'm decentralizing my own airdrop strategy. So how do you sort of, that's a problem.
Yeah, I mean, Sybil is a very huge, attack vector to decentralized governance in general. But, I double click into governance forums as sort of a polling system to just understand, because you can sort of Sybil a governance forum, to your point, but it's more interesting to get a temperature check as to people, just trying to understand what people actually vote for and what they care about. And I think that's, really where the rubber meets the road. Otherwise, it's too much noise, like on Twitter and in Discord, frankly, even too. But, once you reach the governance forum, that's where the conversation becomes real, in my opinion. And then obviously, based on people's weight or ownership in the network collectively, the votes will pan out accordingly. The other thing too, frankly, just to point out, is a lot of VC firms are delegating their votes. Yeah. And so, even though the weighting factor is commonly mischaracterized as it doesn't even matter because the VCs will just determine the vote, that's not necessarily the case. And so the other thing too is the folks who are delegates of those votes are very cognizant of those governance forums. And so I just encourage anyone, if you have an opinion, you have an opinion with some data or an experience to back it up, voice that in the governance forum, and that's the best path to really just being heard.
And you asked, like, how do you isolate the smart people? I think really what you have to do is pay attention to what people are saying and how they're behaving, and whether or not it necessarily acts in their best interest. Obviously, people want to act in their best interest, but if they're making decisions, I mean, again, I'll bring it back to the game. If they're holding assets and they're making decisions that are best for the game but aren't necessarily best for the assets that they're particularly holding, to me, that seems like somebody who sees the big picture and is someone that I can highlight as being smart and trustworthy and kind of, open to asking questions of and getting advice from and whatnot. And that seems to me like there's so much in this space where people are just kind of, I mean, we all know the pump my bags mentality, but even a little bit more sly than that, they're just trying to maximize their own benefit. And if this is actually going to succeed in any meaningful way, it can't just be about individual maximization. It has to be about some collective good. Obviously, like, I like money too, but like, again, we're trying to build something, not just fill our pockets. One hopes.
How do you continue to build when maybe financial incentives go away. So, and that goes beyond gaming, but to NFTs and tokens. If the token is not worth anything, how do you get people interested in building
I mean,
around it?
it's passion, right? Like ultimately, okay, so I spent a long time before I got into any of this as a touring musician. And I'll tell you right now, I didn't do it for the money because there isn't any, right? But it's something that you care about. So I think that like so much of what is being done in this space right now is here's an interesting piece of tech. How do I fit this into something and then let me build? But you know, I think the right mindset is like, here's something I'm really interested in, you know, whether it be a game or, you know, one of the people pitching up here was talking about charity and whatever. Like, if you have something that you're championing that matters to you and the tech fits in, then it doesn't really matter. I mean, obviously finance matters a little, but it doesn't, the incentives aren't the only reason to be doing the thing. Like, if you stripped away all of the crypto and just gave me the game, I'd still be building it. You know, I'd still be a guy in my basement trying to make this game and put it out into the world because I want people to play it. You know, this is just an added bonus, and the idea that people can own their assets is you know, a layer on top, not the end goal.
Yeah, I love that. I mean, it does boil down to passion. It's really no different than an equity, you know, based SaaS startup, for example. When you start, you know, you get equity or upside, whatever it may be, but your valuation is essentially, you know, it's a zero. Your 409A is marked to whatever funding that you just raised. And so there's this element of trust, and you're putting trust in the founding team, that they know what they're doing, that they have a vision, they see a market opportunity, they're the right folks to pursue it. And so you hitch your wagon to those founders, and you go along with this sense of passion on the mission. And so that's like the bootstrapping mechanism. But there are elements too where if you do have a short-term mentality and your token or your NFT, whatever it may be, you know, pumps and dumps or moons too early and then comes crashing down to earth, then you're in a problematic position. And, you know, that's frankly where the short-termism just does not win.
People need to view their token holdings as more akin to equity. It's just you got to write it off.
Not necessarily write it off, but, you know, your goal is to get your essentially your 409A, your valuations moving up, you know, in a healthy pattern. You can't just go, you know, hyperbolic, crash back down to earth, and
but
then
you don't really have control over that. That's the market.
Not necessarily, but you rely on your founders, you know, to see that vision and execute on it properly, and then also on your investors and partners and advisors to just be looking out for these sorts of things.
Do you have any thoughts on that?
No, I think it's very interesting that we're taking mental models from what exists in Web 2 and applying them to tokens, and it's about value creation. And that's ultimately what's going to align the right people. And founders need to be passionate, as Kohji mentioned, and that's going to attract the right people. And as they create and deliver value, that's going to continue to reinforce the community in the right direction in support of the protocol. So I think like it is that simple. The only challenge here is these things are coming to market much earlier in their life cycle before they often have product market fit or a complete tangible direction. And that's something that has to be ridden through. And that's just the state of the market. That's the uniqueness, is people get to participate in the upside of these economies, whether it's a game, whether it's a protocol, much earlier. And with that comes some of the challenges of the short-termism. But that's all aligned by the vision and the direction and the execution against that and the value it creates.
So do you have any closing thoughts, expectations for how the space will change, evolve, mature over the next 6 months?
I mean, I don't know about the next 6 months, but I think we just have to change people's mindsets in a way. Like, I want to build a game, but the game I want to build is not penny stock simulator, you know? And so I think that we need to get people in a different mindset and you know, more long-term thinking about if this actually succeeds, what will the rewards be, you know, years down the line, as opposed to, oh, when the token releases, this is going to happen. Like, no. But what happens when the product actually comes out and people use it, you know? And if we can get people thinking that way, then hopefully things will sort of level out a little bit.
Yeah, I'm very optimistic with you know, founders frankly just coming around on this realization that it's not a function of just raising any capital. Capital is totally a commodity. It's, you know, who comes with that capital, frankly. And then, you know, what's the mentality I just lost my train of thought there. But basically what it is a sign of maturity around founders knowing that it's not a penny stock, machine. They don't need to launch their token, do a bunch of SAFT rounds, and try and pump this thing. Now we're seeing founders, wait for product market fit before they even think about a token. And that's very optimistic because, these things are all about utility. And how are you going to understand and study your utility without some form of traction? So, I think everyone's just moving timelines back. We're extending to more of a long-term mentality as an industry. And I'm very optimistic about that.
Yep, I think the bear market kind of forces that reset, and the meta has shifted to creating value, showing traction before you're launching a token, and that's a really healthy direction for the space.
I feel like we shifted from when token to why token.
Exactly.
But the when token days were fun. Thanks.
Thanks,
you.
guys.
Thank you.